You could end up in big trouble with the government or even bigger trouble financially if you're not smart when it comes to the money that you're making and your taxes. Remember, as somebody that is a content creator, your taxes are usually about once a year. It isn't like when you've got a 9 to 5 and you never actually get that money and it just comes straight out your pay packet and anything that you see hit your bank account is yours to do with as you please. As a content creator, that is not the case, and you've got to do what you can be doing to be as smart as you possibly can. Regardless of your tax situation, usually the smart move as a creator is to take a decent percentage of whatever you earn and put it in a pot somewhere else and forget about it. Pretend you never made it, because otherwise what happens is April rolls around, it's time to do your tax return, you get hit with a big number, and then your bank account takes a massive hit, and it feels like what was almost the point. Whereas if you're smart with it and every month as you're earning your money, you put the money aside, then it's just there ready to go by the time you actually need to actually spend it. Now, again, there are a few different things that you can do to be tax efficient. And in reality, I am not as tax efficient as I probably could be, but I just like the ease of the way that I'm doing it now. I recommend realistically that if you're earning enough to even be having this conversation, you should probably get an accountant and let the professionals deal with it. But it can be difficult to find an accountant that understands and appreciates what we do for a living, and therefore you might, like me, end up overpaying. A year or so ago, I paid about £40,000 to the government in a variety of different tax-related ways, and I'm entirely sure that at least 25% of that I probably shouldn't have done. Between tax, NI, and VAT, VAT is a whole nother problem entirely for a creator, but luckily, if you have crossed into VAT territory, you're usually doing pretty well, but it's still a problem for you personally when you're there. So this video was inspired by this comment. Basically, this dude was asking, how does it work as self-employed, as a content creator, when it comes to taxes, all that sort of thing? Should he get an accountant? Probably do look into getting an accountant if you're earning enough to be considering this, but I'll run over the basics here and you can see if you feel like you could do it yourself. This year, for example, we did it ourselves. Last year, I spent a fortune on an accountant. I literally spent about $4,500 on an accountant just for them after 6 months of time to come to the same figures that I had come to with my own spreadsheets, which was really annoying. So let's go through a couple of ways that it can work as somebody that is self-employed. We'll go through the way that I do it. I'm a sole trader. A lot of content creators, especially when they get larger, will incorporate. They'll be a limited company. They'll pay themselves the minimum amount they can get away with salary-wise to be tax efficient. And basically, there are ways that you can use that system to save on taxes. But when you do that, you definitely want an accountant. I personally stick to the sole trader route at the moment because I don't think I've crossed into the territory where it's going to make a huge difference to me, and I just like the simplicity that comes with being a sole trader. So the way that being a sole trader works is you are, for all intents and purposes, gonna pay about the same amount of tax as somebody that is doing a regular 9 to 5, an employed job. You will pay the same tax brackets versus all that sort of thing. So for example, let's say you're making 3K a month through your variety of income sources as a content creator. So that works out to 36 grand a year. The same way as if you were employed, your takeaway would be 28,971. You would pay 4,686 in tax and 2,343 in national insurance. The difference between an employed person and you, though, is that you would see that £36,000 in your bank account and have to manually put aside that nearly 7,000 yourself, because come April, the government's going to come a knocking and they're going to be asking you for that 7 grand, which again can feel like a horrible hit to have to just send away. So often once you've gotten successful, you're sending away well over 10 grand. Like, you just will be. Here's the way that I think a lot of people cover their own backs with this sort of thing, is whatever they make, they put 30% of it, a third, in a pot. They just send it away. They put it somewhere so that they can set it and forget it, so that they've got their taxes covered for when it comes time. Because remember, even if you choose to spend the money that you're earning, come tax season, they don't care whether you have or have not got the money. They're asking for that money. And this is the mistake that a lot of content creators make, where they'll see the big numbers coming in and think that that's just the amount of money that they have now. And it isn't, because it's all pre-taxes. In England anyway, YouTube, TikTok, all of these variety of different places are not taking the taxes on your behalf. You declare it all as your income. All of it is taxable income. And then that's how you work out how much tax you got to pay. Putting 30% away typically grants you a bit of leeway. It typically covers your back a little bit. You might have some left over, in which case now you can pay yourself what's remaining or leave it for next time. There are a few things that we should probably touch upon. Again, I'm not a professional here. I'm just talking from my own personal experience and the problems that I have had over the years, because again, I feel like I've been messed around by a few different accountants now. So, I think that the VAT threshold right now, as of the 23rd of October 2024, is £90,000. So VAT is value added tax. And for all intents and purposes, it is the government going, you've earned enough money, we would like even more from it. And it's 20%. And VAT can really screw you over. VAT screwed me right over. And I'm pretty sure my accountant kind of did a little bit as well, because I think that So basically, not everything you earn is VAT applicable. So, for example, I am of the belief, I could be wrong, but I'm pretty sure that because of the way that YouTube pays you through AdSense, that you don't pay VAT on your AdSense, and that it doesn't even count towards the VAT threshold either. So if you earn, for example, again, the threshold for VAT is £90,000 a year. In any rolling period, by the way, it's not £90,000 between April to April. It's in any 12-month window, £90,000. So if you have, do you get me? So for example, if you've got a £90,000 threshold, and you make £40,000 through your YouTube views, AdSense, from my understanding, that £40,000 doesn't count towards your £90,000 threshold, and only the £50,000 does, and you've still got £40,000 that you could have made before having to pay VAT. I'm pretty sure that when I had my accountant, they just counted literally every bit of money that ever came in ever as VAT accountable, to the point where I ended up spending about £12,000 on VAT. I'm not entirely sure why, to be honest with you, even today. Yeah. Something you will want to do, though, is you'll want to use your deductions to your benefit as often as you possibly can. And some people will take the piss with this. It all depends on the accountant that you've got. But the general rule is that if something is required for the business, you can expense it. For example, later today, I have a new iPhone 16 on the way. That's for my work. I use it all day, every day for work. There is a reason why this phone is knackered, even though it's only a few years old. And it's because I spend about 8 hours a day filming on it. So that £1,400 or whatever is it's a deductible. Same thing goes with, if you look at creators, right? Creators often don't talk about this, but you know when you are watching a travel vlogger or a food vlogger, all of their meals, because they're filming it, all of their travel flights, all that sort of thing, because they're filming it, they'll be using that as a tax deductible. So it's not that the food or the phone or the travel is free, it's that it reduces your revenue. It reduces your profit. So again, if we use that £36,000 as an example, if you've earned £36,000 this year, right, but you have £6,000 in deductibles, you will only pay tax and NI and all that sort of thing on the £30,000 remainder. You'll probably want to research a list of things that you can deduct, and it's all going to depend upon what your business actually entails. So like, I get to deduct weird things that most people probably can't because of the fact of my content requires me to buy games. For me, I never, literally never, play a game without filming it. So a game for me is wholly and solely a business purchase, which means it can wholly and solely be removed as a tax deductible, which means I can buy games as a tax deductible, use them for profit, rinse, repeat. It's a pretty nice thing to be able to do. Oh, something else I should probably point out, because it's one that I truly don't think I understand yet, but it's something that happens and I think it will catch a lot of people out. In the UK, we have something called payments on account. And as my understanding, basically the government looks at what you have previously earned, and to try to throw you a bone and do you a favour, it ain't, they say, okay, you can give us half of that in July and half of it in January, and then when it comes to April, you won't actually have that much to pay. But the problem is they're looking at your previous year. So for example, for me, I had that really good year in 22-23 where I made about 120 grand, when my average year might be like 60 to 70. So they looked at my 120 grand and whatever I had to pay taxes on there or declare or whatever. But remember, you only pay taxes after all your deductibles. So I think after deductibles, it came to like 98 grand or something like that. And then you might end up having to pay a scary payment on account that is like more than you're going to earn in the following year. They are asking you for more money in the future based upon money you have previously earned when you don't yourself, as a self-employed person, have a guarantee that you're going to make that again. Fortunately, you can request that number to be reduced, and I have done that like for the last 3 years because I don't particularly like payments on accounts. So the way that I think that this works in terms of like practicalities, say you in January, your payment on account in January is £2,500. When it comes time to do your tax return in April, your final tax bill will be whatever it is less the £2,500 you've already paid. So in the government's eyes, they're helping you out because they get to split your tax payments in half or take chunks out of it before you even get there. It's helping you pay it before it's one big problem. So instead of you paying that with that 36 grand, instead of you paying that 7,000 in one go, they'll split it into like 3.5, once in January, once in July, so that when it comes time to April, you've already paid it. But again, because we don't have the consistency a lot of the time with the income that we have, sometimes it can really bite you in the ass, and you got to try and get it changed. Something else to consider is that in the UK there is a bit of a tax bracket you don't want to be in. So for every pound, or it might be every £2, above £100,000 a year that you make, you start losing your personal allowance. So your personal allowance is something like 12 and a bit £1,000 a year that you just do not pay tax on. But once you cross 100,000, you start to lose that. So you start to pay like crazy tax. So generally, people don't want to earn between 100 and 120,000 pound ever because of losing your personal allowance. You end up worse off. You end up losing money. It's again, you're in a fortunate position if you've managed to get there. But I promise you that if you are ever there, you don't feel that fortunate when you're getting bit in the ass for things that you don't feel like you should be having to do. So, for example, I always used to hate, I mean, I still do hate taxes, but like one of the reasons that I used to hate the tax system so much is because I felt like a lot of the money that I was making was not recurring income. So, for example, a massive proportion of that 120 grand that I made a couple of years ago was through my online programs, which are generally a one-off purchase. It is not repeatable income. So, if I had to give away, say those programs made 88,000, which is what I think they made that year. So, of that 120 I made, 88 of it was programs. And say I had to pay, I reckon I ended up at least giving away 40% of the money that I made through those, which means that in my head, just think about how many of those technically didn't actually pay me because of the fact that it all went to the government. I am a little bit less stressed about tax now because the majority of the income sources that I have are recurring. It's not just like someone has paid me for a one-off thing and they will never pay me that thing again. So it doesn't hurt me quite as much. It doesn't sting quite as much. And yeah. Oh, also, the other good thing about having an accountant is your accountant is in and of itself a business expense. So even though for that weird year I spent like £4,500 on an accountant that probably lost me money, and definitely lost me time, because generally you pay an accountant to remove the stress and the time that you need to put in yourself. However, me and my partner ended up having to do literally tens and tens of hours of work ourselves at home, creating them spreadsheets so that I didn't have to pay them to do it, because they just kept asking for more and more information, more and more this, more and more that, and just doing it in specific ways that were specific to them. And every time that they wanted to do it themselves, they asked me for another £420 for their time invested. And I was like, no, I'll make the damn spreadsheet myself, and you can sod your £420. I will send you the spreadsheet when I'm done, because I will get it done much quicker than they will. So for a solid 6 months, they were trying to work on this tax return. And in the end, like I said, 6 months after the fact, it was literally about this time last year that this got solved, and it was for the tax year prior. I was hit with that tax bill of just shy of just about £40,000, and I was like, plus the 4,000 I'd actually spent on the accountant. I was like, this is ridiculous. But that was after the fact of my spreadsheets that we use to track my income and try to predict tax were perfectly accurate to the ones that the accountant had used. You know, the accountant, after using their systems, after using Dext and Xero and all of the variety of different softwares that they require, basically, they required the use of a variety of different softwares that, of course, I have to pay for per month. And they were saying that my spreadsheets were not going to be acceptable forms of like tracking that data. So all of that data had to be manually transferred from spreadsheet into the softwares that they wanted to use. And every time they did that transfer, it was another £420 they charged me. So like I said, it got to the point where I was like, I will do it myself. I will figure it out, because I'm not going to keep spending all this money when we've already put in the hours creating the spreadsheet, making it look very, very simple and very easy to understand. And the maths was definitely right, because your maths came to it. It just took you 6 months longer than it took us. So yeah, this year we did it ourselves. If I were to ever incorporate and go that route and probably be more tax efficient, I would 100% get a accountant, because I wouldn't understand the ins and outs of that whatsoever. So it kind of depends upon the situation you're in. If you're just starting, you're probably a sole trader, and you'll probably be okay, because it's not too difficult. So yeah, when you get paid, whenever you earn your money through your content creation stuff, you probably have a multitude of different income sources, because typically we do. Stick some money in a pot, forget the money's there, because you're going to have to send a decent chunk of money to the government every year, whether we like it or not. What's that phrase? There are only a few things in life that are certain, death and taxes being two of them. And it's true. It's why so many people that are content creators go to Dubai, because of no income tax. And they don't even have to live in Dubai all year. There's some sort of loophole where they only actually have to spend so many days per year there, and otherwise can go wherever they want. It just, their legal place of residence has to be Dubai. So I hope this video was helpful to someone somewhere. And yeah, don't forget to like and subscribe, and I'll see you all later.